And then finally, we still have those two puts, the Trump put and the Fed put. And I think that means you still want to buy any of these dips.
What can Trump do to make sure the market keeps going up?
Well, I think we've seen it with how he's made cabinet proposals or nominations, that he's very pro-business. And I think, as many have said, Trump is very focused on the stock market. So I think communication is still a strategy, and it's a reminder that animal spirits could come back.
Tom Lee of Fundstrat Capital forecasts the S&P 500 to reach 6,300 by year-end, but warns of a potential zone of hesitation in the coming week. His bullish outlook is based on December's strong seasonality, lower 10-year yields supporting valuations, contrarian signals from negative sentiment, and market support from the Trump and Fed puts. Lee highlights Trump's pro-business stance and views tariffs as effective negotiation tools unlikely to harm profit. While optimistic, he advises caution due to potential volatility, particularly with looming federal spending cut.
I'm talking about the bonds 10-year at some point, but you see 4 reasons why you still expect the S&P to continue to rally in December and maybe to 6,300 by year end. What are the 4 reasons?
Well, one is seasonality. December historically is a strong month, but when you're up more than 10% in the first half and it's an election year, December's been up 100% of the time. The second is yields have moved down to pre-election levels. You know, the 10-year's at 4.1. That's good for multiple expansion. The third is, I think it's been surprising, but sentiment's actually turned negative the last 2 weeks, even as the markets rallied. To me, that's a contrarian bullish signal.
So, Kevin, you've been very agreeable up to this point. What about when you take a look at technical levels for Nvidia? Do you share the same sentiment? Do you see where Don's coming from?
I see where Don's coming from. It's a very hard stock to fade, though. So let me hedge my bets here when it comes to the technicals, because once again, you do have a lot of this enthusiasm when it comes to artificial intelligence. And Nvidia has been utilized as a flight to safety type of trade here if we do see some volatility in the broader market. But the reason why I will say that he may have a point here is that we actually have some divergences actually taking place for the RSI. We'll start at point A. Point A, we saw this divergence on the RSI where it's making a lower high and making lower lows, but the price for the most part was actually kind of staying stagnant. We usually have a double top pattern and then we see a pullback. So those purple lines are kind of associating with the RSI divergence, and then when we actually see a flush, we can see that back in February of this year. We had the same type of scenario taking place in late June, and then we started seeing the flush basically in the middle of July. And right now we actually still have that same type of divergence. If you kind of look at around October 17th, RSI has been actually making lower highs on a relative basis and making lower lows. But if you look at the price action, it's been able to, for the most part, hold up. Now you can have a consolidation in time or you can have a consolidation in price. You got to kind of pick your poison there. But if we do see the same type of trend like the previous 2 over this year, you would expect maybe a pullback in the name. And if we do see a pullback, the first area of support is going to be $130. The next one that you're going to be looking at is around $117. That's fairly aggressive, but once again, the divergences usually resolve themselves one way or another. Now, if you're a bull, you have that MACD actually kind of curving to the upside here, trying to hinge a little bit higher. So that kind of gives you a little bit of conflicting data sets. And you also have that bullish ascending channel that's taking place right now. So respect the channel for now. 150 could be an area of resistance. A lot of options activity sitting there. But I understand the reason and his thought process when it comes to potentially a fade. But if it does happen, Caroline, these fades are generally fairly quick, and you do see some buyers actually stepping in aggressively. So you probably got to be tactical if you are trying to short the name.
Yeah, it seems like anyone says. So many people that we talk to say buy any dips on Nvidia. I was taking a look. 91% of analysts have a buy rating on it still, despite this impressive run higher. And median price target 12 months, but 175. So just throwing that out there, Don. I know that these are trades, though. Just want to give you final thoughts, Don. You talked about some potential volatility over the next few weeks heading into year end, that Santa Claus has come and gone. But when you think about 2025, where do you see this market going?
Yeah, the first thing I want to address there is 91% of analysts. When you have that many analysts on one side of a particular trade, I'll take the other side all day long over there. Into 2025, one of the first things that you want to look for, again, is volatility actually picking up. That's one of the concerns. I mean, one of the things that people have really pushed aside, I recognize there's a new administration coming in, but we could be looking at spending cuts, federal government spending cuts, amounting to what, 1.5, maybe $2 trillion. I mean, that's ultimately what, Elon and Vivek are actually looking at right now. And I don't think that markets are actually pricing that in at this point in time. It's a huge consideration moving forward. We're talking trillions of dollars of cuts, and that is literally bottom line into the GDP. Look for volatility to really pick up, and we start hearing more about some of the cost cutting.
Josh, final trade.
Amazon staying long.
All right, thank you very much. Brian Belsky, it's been great having you.
Hey,
thanks for having us.
Thanks for having us. We really appreciate it. Let's stick to the
30 years in the business. Thanks for having us.
Blah, blah, blah. Financials. We're going to go with another A stock, AGCO, AGCO, $7.5 billion industrial company.
All right. Thank you very much.
Thank you.
Yeah.
On holdings, it flashed up on the screen earlier that
Belsky just added it. Right,
yeah, it's a new portfolio, okay. Another new portfolio, yeah.
So look, Belsky's here. We want to have him back. I mean, I'm adding to On Holdings. There will be a lot of gifts from the On retail store in the Lebenthal family for Christmas.
Okay. Steph, you Las Vegas Sands?
Las Vegas Sands. The stock has done nothing in 4 years, and I think 2025 sets up really well. The renovations in Macau will be done. There's an analyst meeting in the spring. That'll be a catalyst. Singapore is on fire, and the stock trades at 14 times EBITDA.
I think Jimmy had win yesterday, didn't you, if I remember right?
I did.
No, I don't forget anything you do. I'm watching you.
Oh, I know.
For the final trade, let's go around the horn. Tim?
AT&T, and their churn has actually returned to levels of their peers. I think you can stay there.
Danny Moses?
Amazon Black Friday football game. The only beneficiary wasn't shopping. It was the gambling company's Genius Sports, long and strong.
Great to have you on the desk, Danny.
Thank you. It was fine.
Dan.
Dude, Benioff getting right up in Microsoft's grill like that? I mean, that one seems like underperformance, not great results. I'd stay away from that.
It's great having Danny here for Obesity Week.
Good. Thank you, guys.
No bullying here.
And Tesla's all-time high.
Come on. The A in the clam was on fire today, Mel.
What's that? As it.
Sometimes it.
I don't know if you watch the way the financial, say this tactfully, I don't know if you watch the way the financial media industry covers tariffs. I mean, how can you call him pro-business, according to these people, when he's pro-tariffs? Because you would just think, if you watch the coverage of tariffs.
Yeah, I mean, to me, it's a reminder that it's good to carry a big stick, and I think tariffs have proven to be a good negotiating tool. I think we've seen some proactive actions by other countries, and in general, I don't think the new White House wants to pursue any policies that would hurt corporate profits. So I think ultimately, whatever is accomplished is going to be pro-business.
That's interesting.
All right, Don, ever the contrarian in your final trade is Nvidia. Are you one of the lone people betting against Nvidia? Walk us through this trade.
Yeah, it's time. It's time. So I've actually taken some shots in Nvidia, over the last few months to actually look for the stock, both higher and lower. But right now, for the first time in a very long time, I think we could fade, if you will, in Nvidia, or not necessarily be so bullish. So the first thing I'm going to say is that I'm going to be selling a very slightly out of the money call spread here. Is it an outright, bearish trade? Yeah, as long as the stock does not continue to appreciate to the upside, this trade could be profitable. But I think Nvidia, for the first time in a long time, is going to be facing some competition, specifically from Amazon. Obviously, we've heard about the deal where Amazon has actually been signed on by Anthropic to actually build, again, one of the largest AI clusters out there in a supercomputer. And that's business, again, that Nvidia is not going to have. I think the entire industry is looking that way right now. Although we still see some price appreciation inside of Nvidia, I think it's going to be rather muted. As such, I'm just going out to the Jan 17 expiration. Again, I'm going to be selling a call spread, and that is going to be selling the 145 calls, buying the 150 calls. Again, selling the 145 calls, buying the 150 calls. This one's done for about a $2 credit. So I bring a credit in, anything below 145, and we're golden in this particular trade. But that's actually the key right now, is to actually slow, if you will, some of the momentum that we've actually seen in Nvidia in the last couple of weeks.
Okay. All right.
Tom Lee of Fundstrat Capital predicts the S&P 500 will rally to 6,300 by year-end, citing strong December seasonality, lower 10-year yields, contrarian signals from negative sentiment, and support from the Trump and Fed puts. He also highlights Trump's pro-business stance and strategic use of tariffs as drivers of market confidence and corporate profitability. However, Lee advises caution due to potential volatility and the impact of anticipated federal spending cuts on GDP growth. His outlook balances optimism for near-term market performance with awareness of potential risks. Do you believe tariffs can be pro-business despite criticism from financial analysts? How might federal spending cuts affect your outlook on the market?